Hey, it's Clay Trader. This will be a video chart on ticker symbol AMFE. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price and just makes mapping out where levels of support and resistance a bit easier to see. I don't mean to state the obvious, but I will anyways. Very nice movement today, not only from a price action perspective, but if you look down here at the volume, very nice volume, biggest volume this chart has had for quite a while. So a lot of eyeballs on this one, so let's map out some levels of support. Then we can talk areas of resistance. First area of support is what I would call the ideal level, meaning if you say, hey Clay, what would make this chart look the absolute strongest going forward? And that would be if the price can stay up above 16 cents. Now don't get me wrong, if the price falls below 16, I'm not saying the entire chart is a disaster and ruined or anything like that. But if the price can somehow manage to still stay up above it, then that would definitely be a huge sign of power on the bull's part. So 16 cents, definitely that ideal level. Taking a step back though and looking at the bigger picture of things. So this definitely assumes you care more so about a broader time horizon, but that is where the purple line comes into play, which is the famous 50-period simple moving average. Keyword being moving. As time goes by, that purple line is going to move itself higher and higher. So from a very simplistic point of view, from the broad sense, as long as the price stays above that purple line, as the line itself moves higher and higher and higher, then the overall trend is fully in the bull's control. You know, the bulls are in full health. However you can best visualize that. Again, yeah, staying up above 16 cents would be great, but from the grand scope of it all, as long as the price is above that purple line, then the bulls are in full charge of the current trend. Now, what about areas of resistance? To me, the main area is right up here at 17 cents. Yes, I realize the price did go up above it several times, but there are also a few times where the price didn't quite hit it. So what I'm just trying to do is split the middle, kind of split the difference there, find a common ground. But at the end of the day, I think we can all agree that, right here around 17 cents is indeed quite a bit of price congestion. Now, if you want to call it 17, slightly above it, that's fine, or slightly below it. But 17 cents to me just makes the most sense. And I mean, really at the end of the day, as long as the price goes through healthy consolidations and build higher bases, then the chart's going to take care of itself, which includes breaking areas of resistance. So whether you want to call it 17 cents or 17.5 cents, point being, as long as the price builds those higher bases and builds upon this momentum, then yeah, the chart will take care of itself, and part of taking care of itself is breaking areas of resistance. So nice way to close out the week and definitely close out the year, I guess. So on that note, everybody have a happy new year. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.